welcome to another episode of The Aspiring Entrepreneur. I'm your host, Hamza Chowdhury, and I'm excited to have you here today. And what I'd like to do is talk about the level 2 in a little more detail than what we've talked about in the past. And the reason why I'd like to talk to you is I like to be a pre-market trader, not so much post-market. I find myself waking up early, feeding the baby, and doing a lot of pre-market trading. And what I realized was a lot of people are concerned about pre-market trading mainly because of two reasons: volume and spread and liquidity. Pretty much the same thing, is how fast and how easy can I get in and out of a trade without being stuck. And recently, Autodesk yesterday came out with their earnings, and you can see here that they actually have a spread between the buyers and the sellers of almost $2. Right now it looks like it's about $1.68. And this is the post-market of the recording of this video. And you can see that there is a buyer here. And we talked about how each of these numbers represents 100 shares. So this is a 1,600 share seller at $244.98 is the ask. And the buyer is only offering 200 shares at $243.30. Guys, that's almost a $1.68, essentially a $2 spread. So if you're on the wrong side of this, so for example, let's say maybe you buy it because you really want to have an Autodesk share at $245, this thing can flush down like 2 or 3 points within seconds. So one of the things that I found is if you're trading, at least in the pre-market, and the level 2 is going to be your best friend, because you're going to understand how big is the spread. And we'll do another video on time and sales. We'll be able to see what type of transactions are happening and what price. Are they happening at the bid price or the ask price? So we'll talk about, are people buying at this price or are they buying at the ask price? And with that type of a spread, you can imagine if you're a day trader who's going for, let's say, a 50 cent, a $1, maybe a $2 move, well, you have that instantly the moment you get into the stock. So understand the risk and the dangers of getting involved in the pre-market and post-market with your level 2, where you have all these different buyers that are doing, let's say, 200, 300, 400 shares, very small orders. This could be big money, right? For them, 200 shares is peanuts. And this is a massive seller. But had I just focused on, let's say, a trading platform like Robinhood or TD Ameritrade, and I didn't use an actual platform, and I didn't use a level 2, I wouldn't know. I would just see that, oh, the stock's 245. What if the person who bought the share at $244.08, it was like they bought one share? Right? So you see that it went up to 245 and you're like, oh my gosh, I got to jump in, not realizing that the person had only purchased one share to show that price. And next thing you know, it flushes down 2 or 3 points. And you're like, well, what just happened? So the level 2 is going to tell you the demand and the supply for the stock and understand where the buyers and the sellers are. But like I said, mainly focus on the spread. And the spread, especially on some of these larger cap stocks and things like Autodesk, you'll notice that they're usually about $1.50, $2. And that could be really dangerous, especially, like I said, if you're buying at the ask price and you already see that you're $2 down in the money. Okay, well, that's all I have for you guys today. Leave a comment below, a question or comment. I do read them all, and I'll see you guys on the next video. Take care. Bye-bye.